Hello and welcome. The US retail sales are now out and everything is not as rosy as expected in America. We have George Magnus, independent economist, commentator and author, on the line to talk us through the ins and outs of this data release. Retail sales rose 0.3% in May as American consumers took a respite following a 3-month surge in shopping. Although it rose, it was below expectations of a 0.6% rise. George, thank you for joining me. Although retail sales have not met expectations, did economists simply overestimate things, or is this a sign of deeper problems within the US economy?
Oh, I think, the retail sales numbers are notoriously difficult to pinpoint. And we did have quite a strong, rebound in retail sales. I mean, they rose by over 2%, which is almost, well, it's a little bit over 8% at an annual rate between February and May, if you want to kind of look at this sort of underlying trend. So the fact that the May number was a little bit kind of soggy and not quite in keeping with expectations, I think, for today, I think people will be satisfied that it's not too bad a number given what happened to the previous month, and April was revised up quite strongly. If we get this again in June or July, however, I think people will say, well, maybe that was just a flash in the pan. But I think for the moment, it's certainly consistent with the economy having a good bounce back this early summer.
You have touched on April already, but was the improvement in retail sales in March and then dropping in April simply to do with the late Easter, or is there something else behind the data?
We've had some extraordinary noise in the statistics. I mean, I think the timing of Easter, I think, is a little bit incidental, to be honest. So, at the back end of last year, for example, in July, August, September of last year, retail sales hardly grew. And then, there was a big slump in December and January of this year. Then they came roaring back in February and March and April. So, I mean, I think it's there's a fundamental economic issue behind the kind of consumer spending numbers, which is retail sales only tells us a little bit about what's happening in consumer spending. But I think the fundamental story is that it's a noisy series. It was, badly affected by the winter. It came roaring back when the weather improved. But the underlying tempo, I think, is quite cool. I mean, not, I would say, chilly, but, we know that there is very little in the growth of wages and salaries going on for most people in the US, and we know that household savings have come down, or the household savings rate came down during the winter. So there may not be a huge amount of fuel, if you want to put it that way, that's going to drive retail sales in the future. So, if the numbers grow at an underlying, 0.3, 0.4% a month for the rest of the year, I think it'll be consistent with a kind of a modest economic rebound. But I guess we won't know until we've had a kind of a run of statistics which are kind of weather-free, if you see what I mean.
Sticking with statistics, reports on unemployment, manufacturing and service industries have suggested growth would rebound strongly in the second quarter after the economy contracted at a 1% annual rate in January through March. What are your thoughts on this?
Yeah, I think, what a lot of economists look at is where we look at the sort of the details, the entrails, if you want to put it that way, of the employment report, which comes out on the first Friday of every month. And last Friday's data for the month of May gave us the opportunity to look at April and May together. And if we look at how much labor was employed and how many hours people worked, we can get a reasonable idea about what's going on in the economy in the second quarter. And it looks like, the economy may have staged quite a strong bounce back, possibly somewhere between 3 and 4% per annum, after dropping by, well, we know it was at least a 1% drop in the first quarter. It could have been bigger. Lots of noise for the first quarter, equally a lot of noise in the second quarter. The underlying rate of how much the economy is growing in America is probably, I would say, probably around 2.25% to 2.5%. So it's not brilliant, it's not a disaster, but it's kind of lukewarm, let's put it like that.
In light of this data, what are your predictions for the consumer sentiment release and the PPI data release tomorrow?
To be honest, one of the strange things that's happened, in recent months, actually, with U.S. economic statistics, is that they've ceased to shock anybody because they keep on coming kind of well within the kind of band of expectations. So my feeling is, we could have seen kind of certainly a stabilization of consumer sentiment. Stabilization to a small increase, I think, simply because I think, the equity market was a little bit feistier, and, that's normally reflected in higher consumer sentiment, but I'm not expecting a kind of a big shocking report. I think it'll kind of be consistent with what we know to be a kind of a reasonable level of consumer sentiment, consistent with reasonable economic growth. The PPI, is always kind of vulnerable to price changes that perhaps slipped underneath the radar screen, but there didn't seem to be too much going on in terms of oil prices or gas prices or food prices. So we'll still see, I think, or I expect we'll see a kind of a modest increases, maybe a 0.1, 0.2 on the core PPI, which will keep kind of the inflation picture looking again pretty stable. There is obviously a chance, given what's happening in the Middle East at the moment, that if higher oil prices stuck over the course of the month, that we'd see a little bit of price sticker shock when we got to the June data, but it's a little bit far off at this point.
Finally, there is a lot of talk and speculation from economists about the future of the US economy, but what are your thoughts on its near to long-term future?
Well, I think it's not going to be. I don't think the outlook for economic growth in the United States is as buoyant as the Federal Reserve's own predictions are. They were expecting something close to 3% growth in the economy by the fourth quarter, which I think is a little bit on the high side for me. I think Wall Street economists and banks are. They were hopelessly optimistic about the early part of the year, and basically followed, the downward revision of numbers actually kind of got a little bit out of hand for a lot of Wall Street forecasters, and now they basically think the economy is bouncing back in the second quarter, and that bounce will be sustained through year end and into 2015. And I'm not convinced that can happen yet, because I don't think that income formation is strong. And I think that although the good news is that, a lot of people are being employed again, there are changes going on in the labor market, with lots of people either not returning to work or leaving because of retirement or whatever. And I think that, as I said, the wages and salaries are definitely a problem. And you can't really sustain an economic revival or recovery unless you have good wage and salary growth. So there is a glimmer of light that wages of production, manufacturing workers and construction workers might be starting to pick up a little bit, reflecting some shortages and tight labor markets. But it's just something we're going to have to watch very closely. If it doesn't really pick up that much over the summer, I don't think we can sustain the kind of tempo of growth which we'll record for the second quarter.
George, thank you so much for joining me. That's all we have time for. But for more from Dukascopy, make sure you click back.